Hi, welcome back to the channel. Every empire ends the same way, with too much debt and too much money printing. The United States dollar, once the ultimate safe haven, is quietly losing its crown. But it's not just America. The entire fiat system, built on debt and confidence, is reaching its breaking point. Today we are connecting the dots. Why the dollar is losing its value, how fiat currency became a global Ponzi scheme, the growing US deficit and the debt crisis, Japan's massive new stimulus, and why more people are waking up to hard assets like gold, real estate, and Bitcoin. This is the dollar trap, the great fiat unwind. The dollar is quietly losing its value. The dollar in your pocket today buys only about 60% of what it did 5 years ago. Inflation might look lower now, but the damage is permanent. Your purchasing power is gone for good. Why? Because the US economy runs on debt expansion. Every time the government spends beyond its means, it issues treasury bonds, and the Federal Reserve, directly or indirectly, steps in and prints money to absorb that debt. The result? The dollar gets weaker. Fiat money is a melting ice cube. It loses value slowly until one day it collapses suddenly. From the end of the gold standard in 1971 to the money printing spree after COVID, America has debased its currency again and again. What used to be a dollar backed by gold is now a dollar backed by faith, and that faith is fading. The fiat Ponzi scheme. Let's be honest, the modern fiat system looks a lot like a Ponzi scheme. A Ponzi scheme works only as long as the new participants bring in fresh money to pay the old ones. In our system, governments must issue new debt to pay off the old debt. The Federal Reserve prints money to buy bonds. The Treasury issues bonds to fund deficits, and the cycle feeds itself until inflation, confidence, or interest rates finally break it. Central banks have gone from inflation fighters to inflation creators. When growth slows, they cut rates. When crises hit, they print more. And every time they save the system, they make it weaker for the next shock. That's not capitalism anymore. That's creditism, where debt, not productivity, drives everything. The US federal deficit has crossed its $2 trillion a year, and that's during peacetime. The national debt is nearing $38 trillion. That's over $100,000 per American citizen and climbing fast. The interest payments alone has already exceeded the entire defense budget. When your credit card bill grows faster than your income, something has to give. And here's the trap. Higher interest rates don't just slow the economy. They make the debt even more expensive to maintain. So the government borrows more to pay the interest, and the cycle continues. This is how the great monetary empires fail. Not overnight, but slowly, then suddenly. The dollar is still the world's reserve currency, but history reminds us reserve status never lasts forever. Investors are calling it the debasement trade, moving wealth out of the paper assets into hard assets that cannot be printed. Gold, silver, real estate, productive farmland, and yes, Bitcoin. As fiat currencies lose credibility, hard assets become lifeboats. That's why institutions from BlackRock to sovereign funds are quietly rebalancing towards hard real assets. They are not betting on growth anymore, they are betting on preservation. The US isn't alone in this slow-motion crisis. The Japanese yen, once a powerhouse, has crashed to 40-year lows against the dollar. Japan's ultra-loose monetary policy has made the yen the world's carry trade currency. Borrow cheap in yen, invest anywhere else. Meanwhile, Europe faces stagnation and fragmentation. The euro has lost nearly 30% of purchasing power in just a decade. Both regions are trapped. Raise rates, then you crash the economy. Cut rates, and you debase the currency. The dollar looks strong, but only because others look weaker. In real terms, all fiat currencies are sinking together. Recently, Japan's new government announced another massive stimulus, billions in spending to revive growth and boost wages. But it's déjà vu all over again. Japan has been stimulating for over 30 years. The result? The record debt to GDP ratios, an aging population, and decades of stagnation. And now, the rest of the world is following the same script. Fiscal deficits, central bank bailouts, asset inflation instead of real economic growth. Every solution adds more fuel to the fire. More debt, more distortion, less confidence. Quietly, a new generation of investors is waking up. They are realizing that financial assets, stocks, bonds, and even cash are promises, but hard assets are proof. Gold doesn't default, land doesn't vanish, Bitcoin doesn't need a central bank. In every currency crisis in history, from ancient Rome to Weimar Germany, those who held hard assets survived, and sometimes thrived. The next decade could be another chapter in that same old story, the return to real value, where wealth must be earned, not printed. The end of the dollar's dominance doesn't mean the end of America, but it does mean the end of easy money. We can't print our way to prosperity. We can't borrow our way to stability. The future belongs to those who understand sound money, real assets, financial discipline. So ask yourself, what will you do when the music stops? Because the greatest wealth transfer of our lifetime is already underway. Stay informed, stay prepared, and remember, history doesn't repeat, but it rhymes. Thank you for watching. If you find this valuable, hit the like button, subscribe for more, and share this with someone who needs to hear it. See you in the next one.